In this video, I'm going to do a deep delve into the actions the Robinhood investing app has taken in response to the meteoric rise of GameStop stock, and why many retail investors, including those from WallStreetBets subreddit, are unhappy with the decisions Robinhood has made, with some even joining in on a class action lawsuit against the company. Now, before we go any further, I just want to say that I'm making this video solely for the purpose of informing you, the viewer, about a topic that is extremely relevant to your investing decisions, and it's not meant to disparage anyone or take a side. And I will do my best to fairly cover all parties involved, so at the end of this video, you will be as informed as possible. And I believe the best place to start this video would be January 11th, 2021, the day GameStop announced that Chewy co-founder Ryan Cohen would be joining their board, after Cohen built up a 10% stake in the company and pressured their management to better focus on digital sales, so GameStop could better compete in the modern world. You see, GameStop had been trending upwards over the previous months, as the company recovered from the pandemic and was additionally bolstered by the release of the next generation Xbox and PlayStation consoles. GameStop was on the rise, and Ryan Cohen's entrance gave investors the confidence to really start bidding up the price of the stock. However, this meant trouble for one group of investors, the shorts, which mainly consisted of large institutions and hedge funds, most notably Melvin Capital. And if you're unfamiliar with the term short, it just means that these hedge funds and institutions were betting that the price of GameStop would stay low and profit when this was the case. However, these same groups were vulnerable to infinite losses potentially if GameStop stock were to rise, as a contingency of being short a stock is that you will eventually have to purchase the stock back to return to your broker who lent you the share. And if you have to buy it back for more than what you bought it for, you can end up in a real hole. Complicating the issue further for the shorts is that there were actually more shares shorted than there were shares available to buy, meaning that in case the price of GameStop skyrocketed, many of these shorts would not be able to find shares to close out their position, or in other words, stop their losses. And even in the case they found shares, this would drive up the price of GameStop stock even further, and this is what is known as a short squeeze. Many retail investors on WallStreetBets subreddit realized this was a possibility and decided to aggressively purchase shares of GameStop while minimizing the amount they sold to take profits, driving the price of GameStop up. And from January 11th to January 28th, GameStop stock increased from $20 per share to nearly $500 per share at its peak. And given a large amount of conflicting information, I will not even begin to speculate whether this increase was primarily caused by a short squeeze or just by aggressive buying by retail investors. Regardless though, the volatility was mounting as the stock continued to rise, and many retail investors continued to jump into the stock even at increasingly higher prices, with over 50% of Robinhood's 11+ million users owning at least one share of GameStop stock. And on January 28th, Robinhood decided to take action, effective immediately. Robinhood users would no longer be able to buy shares or options of GameStop, as well as other stocks that had seen recent volatility, including AMC, BlackBerry, Bed Bath & Beyond, and Nokia. Users would only be able to sell their existing positions of these stocks or exercise their options. This resulted in a lot of demand that was driving these stocks up to be temporarily taken out of the market, and as a result, these stocks fell sharply on the 28th. Robinhood released a statement later on the 28th explaining their decision, which I will read now. Quote, "Our mission at Robinhood is to democratize finance for all. We're proud to have created a platform that has helped everyday people from all backgrounds shape their financial futures and invest for the long term. We continuously monitor the markets and make changes where necessary. In light of recent volatility, we restricted transactions for certain securities to position closing only. We also raised margin requirements for certain securities. Amid significant market volatility, it's important as ever that we help customers stay informed. That's why we're committed to providing people with educational resources. We recently revamped and expanded Robinhood Learn to help people take advantage of hundreds of financial resources we offer and educate themselves, including how to make sense of a volatile market. In 2020, more than 3.2 million people read our articles through Robinhood Learn. We are committed to helping our customers navigate this uncertainty. We fundamentally believe that everyone should have access to financial markets. We're humbled to have helped many people invest in the markets for the first time, and we're determined to provide new and experienced investors with the tools and resources to help them invest responsibly for their long-term financial futures." End quote. So as you can see from reading that, Robinhood believes they acted appropriately to protect their users from extreme market volatility, as many of these traders could end up holding expensive bags if any of these positions fell through. However, many retail investors and especially members of the WallStreetBets subreddit were not satisfied with this decision, as it contributed to the sharp decrease in the prices of popular retail investor stocks, resulting in many retail investor portfolios to be negatively impacted, some severely if they are overweight GameStop, AMC, BlackBerry, Bed Bath & Beyond, or Nokia. These events have led to an increased discussion on whether trading platforms should be allowed to restrict their users from trading positions they own freely, and I would like to get your thoughts in the comments down below. Have a great day.